You are listening to Charting Wealth for Monday, the 16th of May, 2016. Where are we? Well, the market continues to move down. Friday, the 13th, was a down day. The total market, which is where we always begin, IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. It tracks the whole market. That was down 0.76%. Again, that's about 0.75% down. Now, we can see that we've tried our best to sort of draw a trend line. We don't have the best trend line going down, but the market did roll over back on the 28th. What were we waiting for? We were waiting, when we go to our half-day or 4-hour chart, we were waiting for a rollback. That occurred on the morning of the 10th of May. The market moved up, crossed over going up on our MACD chart, then moved back over going down late in the day on Friday. Well, Friday afternoon. That was the time to enter. You may find a point on Monday if you did not enter on Friday, but that is what happened when we rolled back over in the direction of the big trend. So we were waiting for that, for a jumping on point. Hopefully some of you did that. Now you may not be trading down on the total market, so what we'll do next is we will go, because it's easier to go on a fund like SPY. What is that? Well, that is the Standard & Poor 500. And if we look at the 2-day chart, what do we see going on there? Well, it crossed over going down back on the 28th of April on the 2-day chart. Rolled back over during the course of the day, actually down more than the total market. It was down 0.87% for the day. We see the MACD and the signal line diverging even broader. The derivative oscillator heated up even more. How did we know that this was coming? Well, we saw the derivative oscillator continue to heat up, and the MACD and the signal line continued to move down. Those are telltale signs that show you from that type of moving average computation what we see with the moving averages that are compared in order to give us the moving average convergence divergence indicator, that we had a downtrending market on that large chart. Not surprised that it rolled over, even though the last two-day candles were actually up. But if you look what happened, even though they were up, and these are the Hinkin Ashi candlesticks that we use, one reason we really like them is they show us what's happening with price movement, but at the same time we can compare that and see that there's a divergence between that occurring and what's really going on with the indicators as far as the derivative oscillator goes and the MACD. Those continued to move down, telling us those were false up moves over the 10th and the 12th. And again, that's May the 10th and May the 12th on our 2-day charts. Not a surprise that it rolled over on the 13th and down again 0.87%. Now let's look on our 4-hour chart, see if we had an entry point. We did, also in the afternoon. Now you might be saying, when you say an entry point, who would buy the SPY knowing that it's going down? Well, you don't buy the SPY when you're doing your virtual trade, and I'll talk about virtual trading in a minute. You buy Sierra Hotel, and I'm just saying that so those of you listening know SH as in Sierra Hotel. That is the ProShares short S&P 500 exchange traded fund. What does it do when you see the S&P 500 going down? It is a short. It is an inverse fund. It goes up as the S&P 500 goes down. Isn't that a little sophisticated twist on how to make money when the market's going down? So remember that. Pay attention to it. Now, to talk about virtual trades, we do not call stocks. We are not a stock calling service. We are not a firm that gives you investment advice. We're an education firm, first and foremost. It's on everything we talk about. We do not advise you. We are not advising you. We are asking you to practice with us, learn to make practice trades, open yourself up a virtual account at any of the online brokerage firms and start practicing. Once you get really good and you've taken our courses, you've gone through everything, you've read all the books you can read, you've gotten really good at it, and you want to make your own mind up to spend some of your own money, that's your call, not our call. We are not advising you to do anything with your own money. But That is where the market ended as far as the Standard & Poor 500 on Friday. Now we're going to go to the Qs. What is QQQ? It is the NASDAQ 100, the technology stocks. They were down for the day, not nearly as much as the total market or the S&P 500, down just 0.37%. We can see the derivative oscillator losing energy, even though it has been going down over the course of this first day of the two-day candle. It was also down back on the 12th, unlike the total market in the S&P 500 that had two prior green candles. There was a spinning top with a red open box on the 12th for the NASDAQ 100, but it's continued to track down. Derivative oscillator is still negative, although it's lost some of its downward momentum. And the MACD is still negative and pretty much paralleling, going down between the signal line and the MACD. They're not converging, but they're not diverging significantly either. So let's look at what happened during the day. On the Qs, the NASDAQ 100, it was down for the day a little bit, up in the morning with a lot of, again, negative, no negative or positive sentiment, a lot of question marks with what we call a doji, means indecision. The afternoon we had some down movement, a lot more down movement than the market ended up closing on. And we don't have a crossover going down yet, so no confirmed crossover, no entry point yet for the NASDAQ 100. So again, keep your powder dry if you were looking at a trade in something like QID, which is a double short. And again, when we say a trade, we mean a virtual trade. That is where we ended with our three indexes. Now we're going to go back to our two-day chart. Lastly, for Monday, we're going to look at gold. Gold was up 0.45% on Friday. Gold is still a confirmed up move, but it is getting so close to cross. It did actually. Now, this candle's not closed out yet. The two-day candle for May, the 13th, has not closed out. It'll close out on Monday, but it is down. It is still above the two-day trend line, but it has crossed over, going down just barely. So we have that crossover, and in fact, I guess we tried to actually draw some type of, we're going to actually just remove it. We cannot draw any type of trend line in this type of condition. We've just had a crossover going down on the big two-day chart on gold. So still positive on the derivative oscillator, just crossed over barely at the end of the day, and we don't have a closed candle yet. Candle's still open, so we'll just watch gold for the time being. It could pop back up on Monday and never really qualify that crossing over. Let's look, though, however, at the 4-hour chart. If you know, over the last few days, we've told you that gold has been a little schizophrenic, and we had no trade on that. Gold crossed over going down on the short chart back on the 5th of May. It's continued to move down on that chart, although that downward movement has been losing its momentum on the derivative oscillator. And the MACD and the signal line do appear to be converging, but again, no clear-cut answer there. We'll have to just wait and see as we get into the week starting Monday, the 16th of May, just what transpires. Well, hey, we appreciate you being with us on our daily review. As soon as I finish this up, we'll start uploading it, and we will be recording our weekly review and forecast. If you've not heard that yet, that's what you really need to listen to also, as well as our daily reviews. Our weekly review is our most popular broadcast that we do every week. It's a weekly review and forecast. We look over what moved the market over the past week, what might be moving it over the next week, what kind of things are on the schedule to be heard during the next week. The week starting the 16th, what might actually be moving the markets. It's the only time we look at the weekly chart, which is important for you to know the directions it's moving in. We appreciate you so much being with us. Thank you. If you have any questions, concerns, problems, go to the website, chartingwealth.com. Be sure to sign up for our newsletter. With that, you'll receive our How to Read a Stock Chart video, in addition to the layout that you see on the video screen. If you happen to be watching the video, we talk about that layout on our audio podcast. So if you'd like to actually see it, if you sign up for the newsletter, you'll get a link to freestockcharts.com, where our layout is available right there for you. Again, follow us Facebook, Twitter, Instagram, YouTube. We appreciate you. We love to hear from you. All the best. Hope you have a great week trading. God bless from chartingwealth.com.